Hmm?
Say what?
Tariffs have been giving the stock market another round of beatings because President Trump recently announced that the 25% tariffs that were paused on Canada and Mexico are going to be restarting in March. After that, we also got the news that Warren Buffett sold off his entire stake of SPY and VOO, which are two S&P 500 ETFs, which have a lot of investors speculating as to why he would do that. And then number three is crypto, because Bitcoin prices have fallen to below $90,000 a coin for the first time in 2025. So there's a lot that I want to go over in this video, and here's what I'm going to do. First, I'll talk about the Trump tariffs and its impact on the stock market. Number two, I want to talk about Warren Buffett selling off those S&P 500 ETFs. And then number three, let's talk about crypto. So starting with tariffs. Remember, in early February, President Trump announced a 25% tariff on Mexico, a 25% tariff on Canada, and a 10% tariff on China. The 10% tariff on China was imposed, and that was, business as usual. But the tariff on Canada and Mexico really shook up markets, and 2 days after those tariffs were announced, they were paused because President Trump worked with Canada and Mexico and agreed to put a pause on those tariffs if both of those countries work to secure the United States border against illegal immigration and illegal drugs, and both countries agreed. But now, and this is what President Trump is saying that tariffs are back as usual. And it's not like that. I think a lot of investors were hoping that maybe these tariffs were just a negotiation. Maybe they're not going to actually go through because you go back to inflation, they have to be for uncertainty, and no investor, most investors, I should say, don't like uncertainty. Now remember, tariffs are a tax. If I produce a car in Mexico and it costs me $10,000 to make that car in Mexico, a 25% tariff effectively means that I now have to pay $12,500 to produce that car in Mexico, because I still have to pay the $10,000 and then the $600 tariff tax to bring that car into America. So now, if I'm a car company and I have to pay this additional 25%, I can pay eat up all that cost myself and straight my profits, rather than me charge more money to get that car. This is why some people are concerned that these tariffs will be inflation worse, and there's a lot of uncertainty as to what's going to happen. But the question here is, what are these tariffs actually going to impact? Because Canada and Mexico provide different supplies. But Canada,
Excuse me.
imports food, energy, machinery, and lumber. See why that might be second. For Mexico, it is cars, when it comes to energy, there's been a little bit of a leeway in tariffs on energy, specifically oil. But the reason why lumber is interesting is because lumber...
Easy ways to get money in and out. There'll be lots of liquidity for cross-currency and cross-border payments, and it will become a settlement system that will be high value.
Very good.
Yeah, that's kind of where we are now. We're trying to move into that stage where we have big players, lots of liquidity, and that way there'll be easy ways to get money in and out. There'll be lots of liquidity for cross-currency and cross-border payments, and it will become a settlement system that will be high value.
Very good.
Yeah, that's kind of where we are now. We're trying to move into that stage where we have big players, lots of liquidity, and that way there'll be easy ways to get money in and out. There'll be lots of liquidity for cross-currency and cross-border payments, and it'll become a settlement system that will be high value.
Very good.
Yeah, that's kind of where we are now. We're trying to move into that stage where we have big players, lots of liquidity, and that way there'll be easy ways to get money in and out. There'll be lots of liquidity for cross-currency and cross-border payments, and it'll become a settlement system that will be high value.
Very good.
Yeah, that's kind of where we are now. We're trying to move into that stage where we have big players, lots of liquidity, and that way there'll be easy ways to get money in and out. There'll be lots of liquidity for cross-currency and cross-border payments, and it'll become a settlement system that will be high value.
Very good.
Yeah, that's kind of where we are now. We're trying to move into that stage where we have big players, lots of liquidity, and that way there'll be easy ways to get money in and out. There'll be lots of liquidity for cross-currency and cross-border payments, and it'll become a settlement system that will be of high value.
Very good.
Yeah, that's kind of where we are now.
And this time, the warning signs are coming from Wall Street. They're coming from Walmart. Stay tuned. I'm your host, Steve Van Meter, and thanks for joining me today. Our show today, for decades, Walmart has been a symbol of American affordability, but today they become a harbinger of economic doom. What did they say that has everyone on the edge? As you're about to see, the truth is more frightening than you think. Plus, you could be missing out on life-changing profits. The proof, Bank of America's hottest trader of the year was a slam dunk for our subscribers using our proven momentum strategies. Stay tuned to the end of the show to learn how you too can make big money trading momentum, just like our subscribers. Now, let's over to Bloomberg, where we picked today's story for the headline. As Walmart profit forecasts fall short on slowing growth, and this is something we've been worried about. We've been talking about how inflation is running too hot and that income growth isn't keeping up, and this is causing demand to plunge. Walmart now warning that a storm for the American economy is clearly now on the horizon. On a call with analyst Joe Rainey, the company's chief financial officer, described this guidance as consistent for the past year, but noted there are still uncertainties related to consumer behavior and global economic and geopolitical conditions. Now, it's obvious he's talking about the tariffs when he's talking about global economic and geopolitical issues. But when he's talking about the consumer here, this is important to understand. He mentions that there are uncertainties related to their behavior. Now, we shouldn't be seeing uncertainties if the economy has experienced a soft landing. What getting worse, something we've been talking about, and the evidence now is getting very clear. For the upcoming year, Walmart expects overall net sales growth in the range of 3 to 4%. And keep in mind, that's not inflation adjusted. So you start to knock inflation off that number, you get something less than 2%. That's not a good sign for Walmart. And here's the bigger issue. We haven't had reporting yet from other retailers. Well, if Walmart's struggling and seeing signs it's going to get worse, just wait till everyone else tells you the state of the consumer. We're going to find out it's far worse than everyone wants to believe. And that's lower than the 5% growth the company experienced last fiscal quarter, which makes perfect sense because the economy was better in the last fiscal quarter. And we know during the end of the year, consumers were front running the tariff. Now we're finding out the reality. Income growth isn't there. The labor market is starting to weaken, and all that means is consumer demand is coming down, and that for retailers is the worst possible sign. Let's take a look at consumer price index. This shows blue against real retail sales. That is shown in red, both on a year-over-year rate change. Let's go back to the late 1990s, and what do we see? That the consumer price index is rising and rather rapidly. At the same time, what we note that happens with incomes, they start to slow down and peak, and that has an immediate impact on real retail sales. You can see here around 1999 they peaked and then decelerated all the way into the contraction that moved into the dot-com bubble. As we move forward in 2006, we see the same trend. Inflation shoots higher, but we know wages didn't keep pace. That had, again, an immediate impact on real retail sales as consumers had to pare back their spending to deal with higher prices. Sure enough, that caused real retail sales to decelerate, enter a contraction, and we headed right into the global financial crisis. Let's look at where we're at now. We see nearly 3 years of negative real retail sales. Many say that the end of the year was the turnaround. The demand was going to surge higher. To know that was all due to tariff front running. What are we seeing in the data from the manufacturing sector here in the U.S.? Inflation rising. What are we hearing from China? That they're potentially devaluing the currency. That would cause inflation in the U.S. to go up. How about tariffs? Yes, it's going to have an impact. So we can expect now prices to go up. What does that mean for real retail sales? They're likely now to head down. That's exactly what Walmart is telling us is coming. And Ray said in an interview that the guidance list doesn't include the potential impact of tariffs given the unpredictability around the levies. Walmart imports foods from Mexico and general merchandise products like microwaves from China. And we'll work with our suppliers. We'll lean into our private brands to keep prices low. And that the company has operated with tariffs for several years. Now, what he's telling us here is that consumers are trading down because he wouldn't be focused on their house brand, which everybody knows comes in at a very low price point. What the consumer wants. So he knows there's financial support.
What fucking do you do?
Energy and food and still spend on the discretionary side of the economy. Meanwhile, higher prices are also impacting higher income households who are now trading down the Walmart in a bigger way. Now, normally they're doing everything they can to save a few bucks, but something that should be putting money in your pocket is our momentum trade system. Check it out, make America the biggest trade this year. That was the business yesterday, up nearly 11%. And here you can see back on the 16th, this was the note we gave our subscribers. Now, many people nervously indicate that we look at every missing one big component, and that is the trend. We've changed the game on this. We've made a revamp to our Momentum Timer Pro Report. Stay tuned to the end of the show, because if you want to make big money trading momentum, well, we're going to show you the way. Check out the links in the description below. Grab those coupon codes for a free 30-day free trial, because I would describe the consumer as steady, Rainey says, and the spending is far from a complete rebound. Well, that's obvious. There is no rebound. What we're seeing is demand decline from consumer spending into the end of the year to front run the tariffs. You know, general merchandise sales are improving, and demand from holiday season. Incomes go down and inflation went up. Households had to cut their spending, and sure enough, that sent us right into the dot-com bubble. We see that in 2006. Incomes went up, but inflation went up faster. As income growth started to peak and roll over, retail sales took a hit. As they both decelerated, we went right into the global financial crisis. We almost had a double-dip recession around 2010 and 2011. It was very clear income growth decelerated in a big way. Retail sales didn't take such a big impact. It's what saved the day. And look where we're at now. Walmart talks about how consumers are busy. It's very flatline, but we're about to see inflation head higher. The risk is consumers will not be able to afford it. Demand will come down for retailers. They're telling us very clearly a storm is on the horizon. And Walmart, the first big box retailer to report quarterly figures after the holiday season, saw its stock plunge 6%. The company's results just came a few days after data showed a slump in retail sales, which we completed, and that comes at a massive sacrifice in the retail sales. And this does have an impact on the equity markets. Let's take a look at total incomes, still shown in blue, now overlaid against the NASDAQ 100. And what we see as we go to the top level, as income growth decelerates, well, stocks eventually start to come down. It makes perfect sense. As inflation drips household budgets, they have less money to invest. In some cases, they have to sell their investments to make ends meet. Next thing you know, stocks and demand come plunging down. We see the same thing happen going into the global financial crisis. It almost happened when we saw a double-dip recession. Incomes went down, You can see the stock market choke, rallies choked again. We saw it happen around 2015 into 2016, and now what investors say the market can only go up and it's going to surge higher. Meanwhile, income growth is down, plateauing, is likely to head even lower because if Walmart says demand's going down, this is going to backfeed right into the manufacturing sector. There's going to be a lack of new orders. We know hours worked are going to get cut, more jobs are going to get cut. At the same time, we're going to see that flow through to the services sector, as we typically do with about a 3-month lag. And consumers are really going to get sticker shock in the next few months if these tariffs become a reality. Coupled with the insurance crisis in California, coupled with gas prices, eggs are still $12 a dozen in some places, that is if you can find them. Coupled with some of the rising costs of the consumer index, we're hitting a tipping point, and consumers can only take so much, and that is something we've been warning about, that we are facing an inflection point where consumers say, look, and milk prices are going up, and income's not keeping pace, I can't afford it, I've got this massive amount of debt that I've built up, high interest rates, insurance and other costs are rising, something must give, and that's going to be the discretionary side of the economy. That means it's going to lead right to more job losses, and the evidence of that is clear as U.S. jobless claims now tick up slightly, right in line with pre-COVID levels. Now, this is very interesting because initial claims increased by a mere 5,000 to 219,000 in the week ending February 15th. But normally that number is relatively low historically, but that's not the number we've been concerned about. We've been watching continued unemployment claims because what happens in the beginning of a year, there's a lot of people that lose their job for seasonal reasons, but then the economy starts to absorb them and we see that number come down. There's a big problem. It's not coming down. Continued claims of proxy for the number of people receiving benefits increased to 1.87 million in the week ending February 8th, indicating the economy is not creating jobs. And this is a huge problem because when we look at continued claims in blue against initial claims in red, we see very clearly where continued claims go. Initial claims eventually follow. You can see that going into the dot-com bubble, once again going into the global financial crisis. And look now, continued claims rose, plateaued a little bit, rose again, plateaued, rose, and now they're plateauing a little bit. Initial claims down, but that's not going to last for long because if these people that have been on unemployment for an extended period of time do not re-enter the workforce and prices go up, that means their spending is going to go down even more because, again, they don't see a big increase in their unemployment checks just because inflation rises, demand goes down. That means, again, other people see their hours and even see a job loss. Nationwide, initial claims have been generally consistent with levels seen in 2019, supporting the Federal Reserve's intention to keep interest rates on hold until inflation, talking about a storm on the horizon. As you take a look now at continued claims against real retail sales, that in red on a year-over-year rate change, and you can see very clearly in early 2000 as initial claims went up.
I told you dinner is ready. I know, I'm coming down. What's the smell?
Recession. We see that happen again. When we talk about inflection points, you can see it in the continued claims data right there in late 2007. They started to head up. There's no looking back. Real retail sales crash right into a global financial crisis. And here we are again, continued claims not heading down. There is an inflection point when they break to the upside. When that happens, it's game over for the U.S. economy. When companies cut spending, as demand for toys has slowed after a pandemic boom, Hasbro and rival Mattel, the maker of Barbie and Hot Wheels, sought to eliminate fixated on inflation, despite the fact they can't see that we're heading into a stagflationary recession, one that's going to send millions of Americans.
Yeah. What? Hmm? Ah. Ah? いい加減にしろよ。
The coming storm. Check this out, because when it comes to trading momentum, well, we just do it better. Here you can see our Brazil trade up 10.64%. Now, how did we do that? Well, check this out, because we have a 71% win rate right now. 14 open trades on our momentum timer per report, 10 are up. This is huge. And we told our subscribers to buy right here. And now it's headed higher and looking to break out again. But a lot of people trade these momentum signals like the RSI and the MACD, and they think, hey, you got to oversold levels, I should buy. And the problem is oversold levels lead to price going down, and then price going down again, and then going down once again. They're missing one key component. My friends, that's why we run a proprietary overlay on all of our indicators. The edge, spend more money, and make it easier for you to trade momentum. Now, you get the report, but you don't even have to read it, because right underneath the report every day, we tell you which trades we think you should take. But you get the report. You get the signal. You get my opinion on all the trades. You get full back-tested data, risk control levels, a weekly update, my personal trading guide. I tell you exactly what I'm trading. And on top of that, because we know you can make money trading our system, we give you a 30-day free trial, because we want to see you putting money in your pocket before you pay us a dime. So with that, I'm Steve Van Meter. Thanks for watching. Thanks for being patient. Bye now.
Hey. Hey. What the? Huh? Ah!
Yagami.
Mm-hmm.
Hmm?
Point.
Yagami. Say what?
Here's your proof.
Say what?
Yep.
Hmm?
Huh? Hmm?
Hey. Hey. Yeah. Nani? Huh? Mushi.
Hmm? Excuse me. Huh? Yeah.
Say what? Hmm? Yagami.
Hey. Check this out.
Nandato? Yagami. Say what?
He mad. He running like a bitch. He ran. He mad.
Aw.
Yagami.
Well?
You have a sec, Shintani-sensei?
Huh?
There's something I need to talk to you about.
Huh. Perfect timing. I got a few words for you myself.
Huh?
Come on. Sounds like Hamura's not too happy. With you.
Huh?
He says to quit digging around. We won the case, it's done. And I gotta say, I agree with him. Or was my victory not good enough for you?
Oh, your victory and yours alone, huh?
You heard me. I was the lawyer. My victory. And thanks to that, work's been just flooding in. It's over, Yagami. Let it die.
Your work might be over, but the murderer is still out there.
This mole you're dying to catch? Well, fuck right off! Your little detective game has done enough damage. Why don't you just leave this alone, huh?
Hamura knows who the murderer is. He hid it from us the whole trial. And that innocent verdict made fools of us all. Maybe you're okay with that, but I'm not about to give this up.
Ha! You talk big, but you're just a mouse, and Hamura's a hungry fucking cat.
Funny, he's the one in hiding. The Kyorei are gunning for him. That's what the shooting was about. See, Hamura knows he's a target. And I believe he's not the only one who should be worried about himself. Do you get the picture?
Huh?
Keep your eyes open. I'm telling you this as a friend. Otherwise, you do you. I'm gonna do the right thing.
Don't talk down to me! You might as well let this mole shit go. Think this is some kind of Yakuza pissing contest, do ya? Come on! The mole is way bigger than you know.
What do you mean? You know something. I can see it in your eyes. Hamura trusts you. Now tell me the damn truth. What about stopping the mole? You willing to take responsibility for another murder?
Don't talk like I owe you. Attorney-client privilege. Not like you'd remember it. Go back to school.
Shintani!
Well, that's no good. I thought you said that you respected that guy, Yagami.
Hello?
Yo, it's me. I'm out front of the Matsugane office.
Looking into the shooting?
Yep. Place is absolutely swarming with cops. Kuroiwa's running the investigation.
Kuroiwa. You mean Ayabe's boss?
That's him. Speaking of, Ayabe's here too. Makes a convincing cop when he tries. I was actually thinking I'd invite him over to Tender. Try and get my hands on that juicy police info, you know? You mind coming along?
Not at all. See you over there. Guess we're doing this. What a waste.
いらっしゃいませ。
It's the spot.
ありがとうございました。